Have you ever stopped to think about what the future of living and maybe even investing actually looks like? Because, the whole residential real estate scene is changing fast, really fast. It's moving way beyond the old traditional models. And right at the center of this shift, something called build to rent or BTR communities. So in this deep dive, we're going to unpack exactly why BTR is pulling in so much institutional money, and also how things like digital innovation, social responsibility, even crypto are shaking things up.
Yeah, it's fascinating stuff, and it's complex, right? Everything's connected. We're looking at how these big global economic trends, urbanization patterns, the digital economy, they're all sort of converging, and they're positioning BTR in this really unique spot for stable, long-term yields, even when the market's volatile. We're drawing on insights from various sources, including experts like Dr. Pooyan Ghamari. He's a Swiss economist, founded the ALN platform. And he's seen these exact shifts happening, how they feed into this new real estate approach.
All right, so our mission today is pretty clear. We want to pull out the most important bits of knowledge from all this. We want to help you understand what's really driving this pretty exciting evolution in real estate. Okay, let's dive in. Let's unpack this. So maybe starting with the basics. What are build-to-rent communities exactly? Essentially, they're purpose-built places designed just for renters. Often you get premium amenities, professional management. But what I found really interesting in the sources was the why. Why are the big institutional investors suddenly so keen on this model? Can you walk us through that appeal?
Well, the real aha moment for these big players, pension funds, insurance companies, sovereign wealth funds, it isn't just about steady rent checks. It's more about how BTR communities have kind of engineered a model that takes away a lot of the usual pain points of property management. You get scalable, predictable income streams, really dependable cash flow. It basically turns these individual rental units into something almost like a highly predictable asset, almost like a bond in a way. And that improved management efficiency. It seriously lowers the risks you'd normally associate with, say, owning a bunch of scattered single-family rentals. So for deploying large amounts of capital, it's a very compelling setup.
That does sound like a big shift. So connecting that to the bigger picture, what are the broader forces fueling this BTR growth? What does it all mean?
Yeah, looking macro, BTR's rise is directly linked to some major trends. We're seeing more people moving to cities, right? Urban migration, there's the ongoing housing affordability crisis, which is a huge factor, and just a growing demand for more flexible ways of living. Dr. Pooyan Ghamari, he specifically noted how BTR models are perfectly positioned to tap into these trends. They offer a stable solution to these changing societal needs, providing, high-quality rental options that appeal to people who maybe aren't prioritizing owning a home like previous generations did.
Yeah, it definitely sounds like BTR is hitting the right notes for the current moment. And speaking of change, how does digital innovation fit in? How does tech boost investor confidence in BTR? It feels like tech's everywhere now.
Yeah.
Oh, absolutely everywhere. And it's a massive game changer for BTR. These digital tools, like the ALN platform mentioned in our sources, they're not just about, fancy interfaces. They enable really transparent property management. They provide real-time data analytics, and they fundamentally improve how investors relate to their investments. So this digital backbone means the big institutional players, they can get instant snapshots of their entire portfolio's health, which lets them make decisions much, much faster about where to put more money, where to maybe pull back. It just speeds up the whole investment cycle dramatically. Less paperwork, less friction compared to old school real estate deals. And interestingly, this tech is often paired with marketing strategies that really lean into social responsibility and community building too.
You mentioned social responsibility there.
Yeah.
That's interesting because, the sources suggest that doing good in BTR isn't just for show. It actually translates into real financial benefits
Yeah.
for the companies and the investors. How does being, socially responsible actually pull that off?
Well, when BTR brands weave cause-related marketing into their story, it genuinely seems to boost their reputation. And it builds deeper loyalty, both from tenants, the consumers, and from investors. Research does show that these kinds of socially responsible initiatives, they positively impact brand image. And they increase investor confidence because they show alignment with ESG criteria, environmental, social, and governance. It signals a commitment that goes beyond just the bottom line, and that resonates more and more today.
Okay, but social responsibility can sometimes feel a bit vague, right? There's always the risk of greenwashing. What actual proof do the sources offer that this goes beyond just looking good? Are there tangible results?
That's a really important question. And yes, the sources do point to concrete examples. We're talking BTR communities that have genuinely incorporated sustainable building practices or have actively invested in local community development projects, not just, token gestures. And these efforts, they've reported measurable results, things like significant increases in tenant retention.
Which means fewer empty units, lower turnover costs.
Exactly, and better investor engagement metrics as well. Ultimately, that stuff directly feeds into a higher ROI, return on investment, and lower operating costs.
It's logical, right? Happy tenants in a community they feel good about tend to stay longer, they tell their friends. And investors who care about ESG, they're more likely to commit capital for the long haul.
So if a company wants to do this properly, leverage this effectively, what should they be focusing on? What are the priorities? Well, the key things seem to be prioritizing real transparency in everything they do, fostering genuine collaboration with local communities, with partners, and crucially, using data to measure the impact. It has to be data-driven. It's vital to link campaigns to actual verifiable social outcomes, not just aspirations. Using digital marketing tools for outreach is key, obviously. And embedding those ESG metrics right into investor reports, that's critical for credibility. So practical takeaways might be things like tracking customer sentiment to see what resonates, directly correlating brand campaigns with things like occupancy rates, and actually quantifying those ESG contributions in the annual financial disclosures. That builds trust.
Okay, we've covered BTR meeting housing needs, digital tools optimizing returns. But the sources hint at something maybe even more revolutionary, something that could change how we think about property ownership altogether. What happens when cryptocurrency gets involved?
Right, this is where we get to the real cutting edge. You have companies like Gold emerging as innovators here. What they're doing is merging crypto innovations with traditional assets like gold. And what's really interesting is how this kind of hybrid approach gives investors another way to get liquidity, another path for diversification, even within real estate portfolios eventually. Imagine buying a sort of digital token backed by gold that you can trade almost instantly like crypto. It blends the stability people associate with gold with the speed and global nature of digital assets.
Okay, but how does that connect directly to real estate? A gold-backed crypto and, say, an apartment building?
Yeah, the bridge there is the concept of tokenization of assets. Essentially, you take a physical asset like a building or even part of a building, and you represent ownership of it as digital tokens on a blockchain. Think of it like buying tiny digital shares of that property.
So you don't have to buy the whole thing.
Exactly. It enables what they call fractional ownership. Multiple investors can own small pieces of a high-value asset. It kind of democratizes access potentially and definitely increases liquidity. You can trade these tokens more easily than selling a whole building. And platforms similar to A-Land facilitate this. It's proving attractive to, well, both high net worth folks and institutional investors. This whole shift towards integrating digital assets, it really signals a broader change in how capital gets raised, how it's allocated, how it's managed in these emerging residential markets. And it does raise that big question, doesn't it? If you tokenize assets, does it fundamentally change the power dynamics? Maybe it makes access more democratic, or maybe it makes large-scale investment even faster, more borderless. The sources suggest it's pushing us towards a future where property ownership might be much more fluid, more accessible.
Wow. We've certainly covered a lot of ground today. From the basics of the build-to-rent model and why big money likes it, through the impact of digital tools and ESG, all the way to the very frontier with crypto and tokenizing assets. It's really clear how interconnected all these trends are. They're shaping how and where we live, definitely, and how we invest.
And if you step back and think about the really long-term implications, consider how this blending of different asset types, physical, digital, enabled by tech, driven by changing social values, how it might not just change property ownership, but maybe fundamentally redefine our whole relationship with tangible assets.
Yeah.
And with community itself.
Well, it's definitely something to mull over.
So what stood out most to you from our discussion today? How might these insights maybe shift your perspective on real estate or investment, or even how communities develop? Remember, getting this knowledge quickly, but getting it thoroughly. With different perspectives, that's really what this deep dive is all about.